Welcome back to HSI Consulting. Our channel talks about taxation and investment, especially for you who are aware that the tax are the issues and the investment are specifically about Indonesia. Right. Today I'm going to be talking about individual taxation for you guys who are coming to Indonesia to stay because of marriage or because of work or because you would like to retire in Indonesia. Here are some of the tax advice for you, and check it out. Right, from the beginning, I'll be talking about some 7 tips or 7 areas where I'll be exposing you with Indonesian tax knowledge and awareness, and where you can take your best advice and best tax planning as you come to Indonesia to work or to live or to retire. Let's get to the first point. I want to go to a little bit about Indonesian tax at the basic level. The basic level of Indonesian income tax is that it is a worldwide income tax. What does it mean? It means that it will subject to your tax of your income from anywhere, any part of the world. That might sound scary for a little bit for some persons, especially those who have their business going on in their home country or in anywhere or any part of the world going on. However, I'm sure that your motivation to come to Indonesia is more attracted to the business opportunity, or because of you fall in love with someone from Indonesia and getting married and come to Indonesia to settle down with them, with your spouse. Now, those motivation will need you to make the best use of whatever you have when you come to Indonesia, right? So the worldwide income tax issue is not so much scary if you know how to navigate the issues, all right? And most of the Indonesian counterparts in wherever you comes from, Indonesia has a tax treaty with your home country, and you must check if you have some exemptions of some facilities available as stated in the tax treaty between your home country and Indonesia. The other thing is to talk about the way the Indonesian tax office summarize or get to know about your income. You need to report your own income and your deductions or whatever you want to claim it in an annual basis. The tax return have to be filed there in the tax office. First of all, you need also to register yourself with the Indonesian tax office. But certainly that will be the case when you are here to stay, right? Just to report you that because of your assessment by your own, the tax office might encounter by checking on your data. They may come to you within 1 to 5 years after we submit a tax return. That means within that 5 years, the tax office may come to you. It may come to you in the first year. It may come back to you to check on your today, it may come to you, check on your tax return or ask questions about your tax return of last 4 years ago. That sounds a little bit crazy, but the thing is to get yourself more prepared with your tax return, you have all the data, the basis of your calculation and computation of your tax available in your records, and you might want to print it out just in case they come to you. You can just open up and look and check out what numbers, where it comes from, and what data have you used to compute that amount, right? So 5 years is the statute of limitation if you get any misreporting, but any periods beyond that, and on the 6 years, 7 years, it's unlikely the tax office may come to you because your tax return is deemed to be solid and confirmed, or sort of like untouched anymore. But what about keeping the records? It means that you still have to keep the records just in case the tax office will come back to you for the 6th or 7th year up to the 10th year. But it's very unlikely they will come to you unless you'll be doing a very massive or very glare tax evasion, I would say. But that will be the case of very rare situation, right? Let's move to the other part, which is telling you that Indonesia has contributed itself into G20 countries. We just happen to have G20 conventions here in Bali, and automatic exchange of information was part of the initiative that has been going on since a few years ago, that between the rich countries and the many countries around the world, they have committed to do the exchange of information for the tax purposes, where this is a G2G, government to government initiative and actions that they exchange the balance of their assets and their income for anyone who have an income in their country, or report their income or have the income, such as you have savings or your loans from some countries where you don't reside there, or where don't you live there, or you're in home country that you have some time deposits there, and it triggers or earns some interest income. So the interest income itself will be transacted. The information of that interest income will be exchanged between the home country to the country of Indonesia for the purpose of tax reporting. So make sure when you have your income from your home country or the other countries that you place your fund, you do report it also in Indonesia, in order for the Indonesian to get to know and cross-check and confirm that the income has been included in your tax return, right? The other thing about Indonesian specifically is that Indonesia has respected that a married male man will supposed to pay tax not only for himself, but also for the whole country, for the whole family, including the spouse. I acknowledge that in many other countries, spouse may need to only separate their taxation and probably their income affairs or anything else, or their assets separately from their husband. But in Indonesia, you may want to get used to the joining of the income and be reported in one tax return.